Hi there and welcome to 1 Degree Advisors, where we help families cut through the noise to make confident financial decisions. And we really need it today. It is Monday at about 10:50 or so, and I think the S&P has dropped just about 7% today alone. Right. So definitely a lot of nervousness and anxiety in the markets, which is understandable. I mean, this is people's lives and livelihood, and so a lot of worry around that. But there are principles that we can follow regardless of markup circumstances. So whether you're watching this today or a day or weeks or months from now, these principles still apply.
Right. Yeah, there's actually three things that come to mind. One is diversification, and that's been a little bit of a lost art over the last several years because stocks have really been going up, and where diversification has seemed to hold people back. But what I've been telling clients is that we're already prepared for this.
Sure.
Having a plan, being more spread out, whether it's lower risk investments like bonds, which have actually made money during this time frame.
Yep.
Even other sorts of investments that are applied in an investment
kind
plan,
of dampening that downside as well.
Right, and they've been really helping out right now, and so we're prepared for something like this.
Something I always like to say too is that in diversification, if you're not unhappy with at least a couple things in the portfolio, you're probably not properly diversified. So it's a good thing, even a raging bull market when things aren't performing well, because in times like this, diversification is really your friend and your ally.
Yeah, it takes discipline to get through that. And that brings to the second point, which requires discipline, is that investing in the stock market is like the volatility. This is the price of admission, is that you have to be able to deal with the fluctuation in order to get that 9 to 10% average annual reward.
Sure.
Because, you may be up 20 something percent like we were last year. You have to go down, be willing to go down as well. And to give some perspective, like right now, as we're speaking, the S&P 500, a measure of the US stock market, is down a little over 14% year to date. That's barely more than the average drawdown in any given single year.
Just doesn't feel good when it happens this quickly.
It doesn't, no, for sure. But in other words, this is normal, and in order to get the rewards of investing, then you have to be able to stick through it. But if someone's diversified, and that goes back to principle number one, is that they have enough in the stable pool to sort of withstand this.
But just talking about that, investing in stocks requires that discipline and that risk premium, right? Because otherwise, everyone would just invest in, conservative investments and they get really high returns. I mean, it doesn't make sense. In order to get that long-term growth that people need for their retirement, to generate income, etc., you have to be willing to take on some risk, and that's what we're experiencing now. It's not fun to go through it. It's one thing to talk about it, that's another thing to go through it, and that's why we make sure to really try and model this as much as we can in clients' portfolios and plans.
Yeah, and I mean, bring it back to the basics of what a stock is. It's owning a business. You're owning a company. You're a company owner, so you have to go with the ups and the downs of how that works. And then that brings us to number three, which is, financially savvy people are taking advantage of opportunity right now. So there is like buying at lower prices through your 401k, making your IRA contributions, maybe taking some money off the sidelines, investing, even if it's not the lowest point, just buying at lower prices. That's certainly part of it. But there can be other things too, taking advantage of if you can harvest any tax losses, if that's available to you. So hopefully, we're doing that for our clients. Hopefully your advisor is doing it if you're not working with us. There could be other things besides just the investing aspects of it. If you have a mortgage, looking at refinancing if you're not at the lowest rate.
Which who thought we'd be here now, again, looking at lower
I've
rates.
thought forever, this is my last loan, I'm refinancing again. It's gonna save, even if it's not a lot, it's knocking a year off the back end of so I'll enjoy that later. If you're looking to buy a home, you can get a low rate. There's other things, like if you're trying to plan a vacation, there's a lot of deals out there right now. Take advantage of these opportunities. I got separate emails from airlines today that said, if you book a flight even over the next 12 months, you can have full flexibility as far as changing your flight. These are what financially savvy people are doing, is taking advantage.
So we covered a lot. Can you real quickly recap those three bullet points again for people watching?
Diversification. Second thing is the volatility is the price of admission to enjoy the rewards of the stock market. And then three is just take advantage of opportunity, and there's lots of different ways to do that.
Good. Well, I hope you enjoyed this. I hope this is helpful, especially during these turbulent market conditions. And of course, as Anthony mentioned, we hope that you're working with a competent financial advisor who knows what they're doing, but also to marrying a financial plan with an investment plan, because although they're two separate things, they need to work in a unified vision, because so often our clients will be asking, am I going to be okay? Given current circumstances, how do things look? And we can easily go to the plan and go, we've accounted for things like this. We've prepared for market drawdowns, and here's how your plan looks. So very helpful, and it provides a lot of confidence. If you would like help in these areas, or you'd like to discuss, or even have a second look at your investments, please give us a call, visit our website. We'd love to talk with you.